Hello and welcome to this session. This is session 5 of Unit 5, Taxation and Government Expenditure in Ghana. So in this session, we'll be looking at sources of government revenue in Ghana. So by the end of the session, we are expecting to be able to explain why the government of Ghana relies more on domestic source of revenue more than foreign source of revenue in recent times, and describe the implications of the various sources of domestic revenue on the economy of Ghana. So we've already discussed some sources already when we looked at taxation. So we talked of the various forms of taxation. So these are the source of revenue for Ghana already. So let's just quickly discuss these ones as well. So we have domestic sources of revenue and then we have the foreign source of revenue. So the domestic sources are mostly revenue from tax generated from the activities of the residents in Ghana. So these are revenue that the government generates within the country, right? So being borrowings in the country, being the taxations in the country, that's a domestic source of revenue. Then we have the external source of revenue, which are donations, grants, and also foreign investment as well as foreign borrowings, right? So these are the external source of revenue, right? Now, in recent times, the government is focusing more on domestic revenue than the foreign revenue because of the cost attached to this foreign source of revenue. Right now, you're going for foreign borrowings; they come in foreign currency. And then remember, our currency here is what Ghana cedis. And then assuming you're going for monies in US dollars, what happens is that you are going to pay back these loans at in US dollars, and then you are going to use these Ghanaian cedis to be paying this US dollars. This would have an impact on your exchange rate because you are going to use a whole lot of your currency for this particular foreign currency, thereby reducing the value of your currency. So one impact of this foreign grants and foreign loans is that it has an indirect impact on the exchange rate of this country. So like currently the government is trying to reduce the impact of these loans on our local exchange rate by reducing the amount of foreign loans that they're going for, or revenues from foreign sources, right? I know that might not be the case on ground currently, but then that is the main reason why government keeps increasing taxes and keeps bringing in new tax measures just to increase its base in terms of domestic revenue mobilization and reduce the external revenue mobilization, right? So for domestic, we said taxes, so tax revenue. So tax revenues are imposed mostly for revenue generation, but sometimes taxes are imposed in order to reduce the production and consumption of certain products which are deemed harmful or extravagant. So we've already discussed this one in previous session, right? So a major portion of our domestic revenue mobilization is from that's from tax revenue, right? That makes up major portion of our domestic revenue mobilization, being it direct and indirect. This all sums up for tax revenue. We have a direct taxes, the company tax, and then tax on oil companies. So these are all direct tax. So the direct tax revenue, these are tax on the income of people, companies, or assets, right? They also have the company tax are mostly the income tax, which are tax on the profits of companies. Then we have the tax on oil companies, revenue that the government generates from the earnings of companies in the oil industry. So this leads us to the petroleum revenue. So the Public Financial Management Act 91 defines petroleum revenue to include royalties in cash or equivalent in barrels of oil, corporate income tax payable by license upstream and mainstream operators, participating interest, government equity interest, the investment income derived from accumulated petroleum funds, then surface rentals paid by licensed petroleum funds. So these are also some source of revenues to the government, but then these ones are from our petroleum businesses, right? So remember, Ghana has petroleum, and then we get some part of our revenue from petroleum activities, not just tax, but also we have source of revenue from petroleum activities. Then we have the indirect tax, which are tax that are levied on the sale of goods and services within and outside Ghana. So if you have, there are some goods and services which are produced here but then sold outside as well, so we charge tax on them. So if you export some goods, we have some tax on export as well, right? So the greatest portion of government's indirect revenue comes from value added taxes. Right. So we've looked at the various sources of revenue for government. That's the taxation, and then petroleum revenues, and then the taxation. I think we have the direct one and the indirect one. So these are the domestic source of funds for government. We are saying that about 96% of government revenue are generated internally. Out of this 96%, 80% are 80% of them are like 81% of these 96% are tax revenues. Right now, the government is trying to reduce foreign revenues. That most of these foreign funds come from loans, and loans are very expensive nowadays. And then if the government keeps taking this loan, what will happen is that it is going to have an impact on our foreign exchange rate, which is not good for whole other stuff in the country. All right, so this is basically what we've discussed in this session.